All right, so recently I made a video on Bitcoin treasury companies and if I think they're causing a bubble in Bitcoin. That was a very popular topic, or that is a very popular topic right now. Another popular topic that we've heard over the last little while as well is, will we see another major Bitcoin bear market? My answer to that question is it really depends on what you define as a bear market. I want to get into that, but first things first, if you get value out of the video, please like and subscribe. Check out the links below. Very much appreciate the support. So getting right into it, like I said, my short answer is, how do we define a Bitcoin bear market? With stocks, this is a pretty easy determination. It's 20%, right? So I don't think anybody would say that it's the same for Bitcoin, obviously, because Bitcoin's more volatile. So the question really comes down to, what do you consider a bear market? Now, that's going to be different for everyone, so it's very hard to say yes or no when the actual hard number is going to be different for everyone. Personally, if I was putting a number on it, I'd probably say 50%. Again, some people might say, oh, that's just some random round number. Again, it's very tough to say, but I would say probably around 50%. So will we see another 50% drawdown? Probably, yeah. Like the problem is nobody knows when it's going to happen, and for all we know, we run up to $500,000 a coin this cycle, and then it comes back 50%, right? So this is the problem with people like this, is a lot of times they're people that want to try and time the market, and one of the most well-tested things when it comes to the concept of investing is timing the market is never going to be a winning strategy in the end. Even the best hedge funds on the planet, right, they still struggle to time the market. So what makes you think you're going to time the market? So the best strategy is always, if you like the asset, will you buy it, right? If you think it's a good price, right? Because like with stocks, well, there's a lot of good stocks out there, but there's a lot that are clearly too expensive. And you know, if a stock is trading at a 100 PE, well, that stock is going to have to grow extraordinarily fast to justify that valuation. Now, the problem with Bitcoin is that it's different from stocks, it's different from real estate, so it's very hard to say, is Bitcoin expensive or is it cheap or is it fair value? It's very hard to say that. My position is, until we see pension funds, countries, corporations, like until it's normal for basically every entity on the planet to have an allocation to Bitcoin, until we see that, I don't see any way you can argue that it's expensive, because this is the best asset on the planet and we have, 1 or 2, 3% global adoption. Like if it's very hard to say that an asset is overvalued when it has such little adoption. Again, I could be wrong. But as far as the main concept here goes, my best answer to that is, I think that the days of 80, 90% Bitcoin drawdowns, if I had to put money on it, I would say yes, those days are going to be a thing of the past. But we are still going to have pullbacks, right? Because people are still going to do stupid things. They're going to use leverage. They're going to borrow money at crazy rates, or money that is going to be very hard for them to pay off. Like, that is true, right? That is true. That still is going to happen. But the one thing that is different, right? And a lot of people say, oh, whenever you hear it's different this time, you know they're wrong. And I understand where those people are coming from, but it is legitimately different this time, because the last time we had a Bitcoin bear market, you could count on one hand the amount of corporations that own Bitcoin. There was no ETFs either, right? The difference between corporations and the ETFs, like, we're literally talking about over 1 million coins that, if there were no ETFs, if Strategy still was the only BTC treasury company, we would literally have over 1 million coins that retail would have had to buy or would have bought. So yeah, it certainly is different this time. And another thing that not enough people are taking into account here, I think, is, this is obvious, but people aren't thinking about it in the right way. So the Bitcoin halvings, the amount of new Bitcoin that comes available per block every halving, it's getting smaller and smaller, number one, but it's also getting to be a closer and closer number, right? Because half of 100 obviously is 50. Half of 50 is 25, right? 25 is a lot smaller than 50. So as time goes on, well, the amount of new Bitcoin available is coming down. But the thing that people aren't quite wrapping their heads around is, well, if there's less Bitcoin available and the demand is still the same, well, the price has to go higher, right? The price has to go higher. And not only that, if the demand is the same or the demand is going up, well, when Bitcoin has periods where it sells off, it's going to jump back up faster than normal because the demand is higher than ever. And there's less coins available. So I don't, even though this is kind of an obvious concept when you think about it, I don't think enough people are wrapping their heads around this. Because just think of it this way. If there were still 50 new Bitcoin being produced every block and we had a big sell-off, it's highly likely that Bitcoin sells off to a larger degree than if we have 3.125 Bitcoin available per block. And I don't think people are wrapping their heads around this. And there's also this point here that I've had up here for 6.5 minutes now. I still haven't got to. From Joe Consorti here, Bitcoin dropped 15% in 3 weeks when Germany dumped. This week it hasn't moved a muscle after absorbing an 80,000 Bitcoin sale. In 1 year, Bitcoin has transformed from a fledgling risk asset into an institutional market ready for size. Institutional allocators have taken notice. So again, Bitcoin sold off to about 115,000 after 80,000 coins were dumped, literally in a day. It might even have been one sale, actually, but within a matter of 24 hours at the very least, 80,000 coins were dumped. I believe Germany had 50 or 60,000 coins that they dumped. And I don't even know if they did it all at once. But again, Bitcoin was down 15% on that news. Bitcoin, after less than a week, it's back to where it was. In fact, I think it's up slightly. So if we can see 80,000 coins get dumped in a 24-hour period, and it has arguably no effect on the price. Yeah, in that individual day it did, but we're talking, 3 or 4 days later, the price is back to where it was. We're going to need to see a lot of coins being dumped very quick to see a really large bull market. Like, to see an 80% pullback, in theory, we're going to need to see over 1 million coins dumped. Right? How is that going to happen? How are we going to see 1 million coins get dumped in a very short period? And really the only way that happens, I mean, there's two ways that happens. Number one, Satoshi dumps coins, which is extraordinarily unlikely. And number two, I think Strategy goes under. But that's also extraordinarily unlikely. And a lot of people are probably saying, oh, you're being too confident when you say that. And it's like, no, I mean, Satoshi's coins are worth over $100 billion. I mean, if he was going to dump them, why would he not dump them by now? Right? So that's very unlikely. Extraordinarily unlikely, I would say. And when it comes to Strategy, the reason that people are so all over Strategy is people think that they're taking all this risk, when in reality they're not, right? I mean, Michael Saylor has said time and time again that they're hedged like 5 to 1, 10 to 1 with their assets to liabilities, right? So there are stocks that people are perfectly comfortable investing in that have 2 to 1, some of them even less, 3 to 1. Like if you have a stock and it's a whatever $100 billion company, and they have $20 or $30 billion in debt, which I don't even think Strategy has that much. Just off the top of my head, I could be wrong there. Nobody would not invest in a $100 billion company if they have $20 billion in debt. Like virtually no one would say you shouldn't invest in them because of that. Now, if it's debt that's not like an insane interest rate, I'm sure there's an exception to the rule. But as a general rule, nobody would not invest in a $100 billion company if they have $20 billion in debt. Like nobody. At least No one would suggest that, unless there's information that's extraordinary, circumstances that aren't normal. So the whole point here is, if it's extraordinary unlikely that Satoshi sells, if it's extraordinary unlikely that strategy goes under, it's extraordinary unlikely we're going to see an 80-90% pullback again. But again, I still think we're going to see 30, 40, 50% pullbacks every now and then. I think that's going to be normal. I mean, we've seen it this year, right? We went from 100 to 80 or whatever it was. So that was, I think, a 30, 40% pullback, right? So I think that's going to be the normal thing, right? I think that'll be normal, right? The stock market will go down 20, 30%. Bitcoin probably goes down 30, 40, 50%. We see a major recession, right? This is another thing that I've heard from some people. They say, well, Bitcoin, it's never been around during a legitimate recession. And technically that's true. But again, why are you just assuming that it's going to be a bad thing? And I also I don't find this to be a legitimate argument, because the people that I hear that from, I mean, there's a handful of, I can think off the top of my head, that I watch quite often. And none of them say that when it comes to, I don't know, Palantir, Nvidia. Like, they don't say that for them. Why are you saying it with Bitcoin? So the people that make these critiques, oftentimes it's just obvious that they either don't understand what they're talking about, or they have an axe to grind with Bitcoin. One of those two almost always happens. So the long story short here, to kind of summarize my views, is I don't think we're going to see 80, 90% pullbacks. I just don't, because I think there's too much demand. There's just too much demand. Like, and here's the thing. If Bitcoin's down 20, 30, 40, 50%, strategy is still going to be buying. And many of these other Bitcoin treasury companies are still going to be buying. It's not like that they need the price to be high to be buying. They really don't. And a lot of people say, "Oh, if we see a big pullback, these companies are going to go under." Well, strategy has been pretty clear when it comes to this. Like, I believe Saylor's even used the example. Like, Bitcoin could go down to 20,000 a coin, which would be like a 90% pullback, and they still would be okay. Like, from what the research that I've seen, they would need it to go down 80, 90% and stay there for probably 2 or 3 years, maybe even longer, but at least 2 to 3 years. And what is the likelihood that that's happened? Because, I mean, even if you look at the past, people say, oh, it's happened in the past. Well, 2 to 3 year bear markets haven't happened in the past. Yeah, like a 1, maybe a 2 year. And the other thing with strategy is that most of their debt, in fact, virtually all of their debt, is several years in the future. Like, the majority of their debt is not coming due until after the next halving cycle. So even if you think that there's going to be a big bear market over the next year or two, well, the majority of their debt isn't even coming due until after the next bear market. And if you're such a believer in this traditional 4-year market cycle, well, that implies that the price will be even higher than it is now, because we'll be after the next halving. So yeah, long story short, I don't see these major pullbacks. But I do still think we're going to see pretty significant pullbacks, like 50%. Like, that's comparable to what the stock market was down during 2008, which is like the worst, other than I guess 87, I think, but the worst market crash that most people alive can remember. That's how much the stock market was down. So it's definitely still going to happen. But again, like, and not to mention too, like, pullbacks are healthy. Like, if I had to choose between Bitcoin going up 30% per year, like literally every single year, there never was a down year, or up, 25%, up 50%, up 100%, down 30%, I would choose that option, because we want the weak hands to be shooken out. Like, we don't want weak hands. We don't want people that don't understand finance. We don't want people that understand what they're holding to be buying. So I think that, 20, 30, 40, 50% pullbacks are a good thing. 80, 90% pullbacks, I don't think so, because then people say, oh, it's way too volatile, and you buy it and you're down 80%. Like, I think that there's a fine line. I think that there is a fine line there. But pullbacks definitely are healthy. So, yeah, long story short here, I don't think we're going to see these massive pullbacks because there's so much demand. And I'm sure there's going to be people that are going to disagree with what I'm saying. So please give me a well thought out argument. Don't just make some stupid BS statement that you have no way of verifying. Give me a good argument, because maybe there is something I'm missing, but I really just don't think so. I really just don't think so, because we've had probably 1 million coins get scooped up over the last year by the ETFs and by Bitcoin treasury companies. And that's not going to stop, especially when we're in bull markets. Like, that's just not going to go away, because the price of Bitcoin will keep going up. The price of strategy stock and a lot of these other stocks will keep going up, probably at a higher rate than the market average. And more companies are going to catch on to this. And more are going to start buying. And that will be even more positive for Bitcoin. So anyway, that's what I wanted to talk about today. If you liked the video, please like and subscribe. Check out those links below and stay tuned for more.